Good morning. I'd like to introduce Tammy Miller, North Dakota's Chief Operating Officer, to kick things off for us today.
Thank you, Michelle. Good morning and welcome. Welcome everyone to the 6th business briefing. It is my pleasure to join you officially as the Chief Operating Officer for the state of North Dakota. I also serve as co-leader with General Dorman of the United Command for the COVID-19 mission. That's kind of hard to say. The United Command COVID-19 mission. I joined Team North Dakota on April 1st. Before that, I served as the CEO at Border States Electric for 14 years. I am so very proud to be working with Governor Burgum now and Team North Dakota to serve all of you. First, let me express my gratitude to our congressional delegation, representatives of Senator Hoeven, Senator Kramer, and Representative Armstrong's offices. We are so fortunate for this team that works hard in Washington, D.C. every day to make sure that North Dakota is well positioned. We greatly appreciate their accessibility, especially during this very critical time. I also want to acknowledge our economic resiliency team, made up of leaders of the state agencies who have joined together all to assist you. It would be impossible to do our work if we were not working together. In addition to economic resiliency team members that will be speaking today, we have joining us John Godfried, Insurance Commissioner, L. Jager, Secretary of State, Erica Thunder, our Commissioner of Labor and Human Rights, Justin Messner, our Coordinator from the Department of Emergency Services, Scott Davis, Executive Director of Indian Affairs Commission, and Eric Hardmeyer, Bank of North Dakota. Thank you all for joining us today. It is a pleasure for me to be joining Team North Dakota and to serve all of you. Please allow me now to turn it over to Michelle Comer, our Commerce Commissioner. Michelle?
Thank you, Tammy. Well, welcome everyone to our last regular business briefing. I am Michelle Comer, the Commissioner of Commerce, and we thank you for spending your time with us today. This week's topic is called Emerging Clarity, the CARES Act, and Other Updates. This week, we're going to dive right in instead of beginning with a review of the CARES Act and the financial resources it provides for small businesses. If you have not been able to join us for the past several weeks, we recommend that you review prior week's presentations, which are available at ndresponse.gov at the Business and Employer page. Over this past week, we have received several awaited updates, such as the supplement to the interim final rule pertaining to the Paycheck Protection Program that was received on Tuesday. It gives more guidance to the self-employed, as well as clarifications from the SBA and other information that's evolved in the past week, along with several CARES Act resources that have not been previously discussed. Your team at the Department of Commerce continues to closely monitor CARES Act and guidance and other developments relating to implementation so that North Dakota businesses can be informed and, as a result, fully leverage these resources so that we are in the best position possible to work through these challenges together. These last many weeks have been a reminder that we are building the plane while flying it, and we are not in charge of the flight pattern. Even so, it is a privilege to be on this journey with you, and the Department of Commerce is honored to serve you during this time and always. As we have stated in past weeks, each business situation is unique, so we remind you to consult with your attorney, accounting, tax, financial advisor, and banker before making decisions regarding your business. Today, we will provide you with newly available information to help you more thoroughly understand the options available for your company. We have taken care to make sure that this slide deck doubles as a resource kit with links to information that we have vetted for accuracy and quality. As the weeks have passed, more and more information is available, along with plenty of misinformation and, sadly, opportunists and fraudsters that are trying to take advantage of this situation. You'll hear more about that later. This makes our reminder today to use only reputable sites all the more important. The team at the Department of Commerce is working daily to update the Business and Employer page that I referenced earlier. We link to the SBA and US Treasury sites, which are also updated routinely. Again, today, this presentation was designed with your questions in mind. You can continue to email businesshelpcovid19@nd.gov with your questions. Again, we cannot provide financial guidance, but we can direct you to resources. And for those of you listening today, please pass the word about these resources to those not able to join us, as a recording of this call and materials will be available for future use. Spread the word to North Dakota businesses through your social media, business and trade groups, and other ways. Now to the agenda. We're going to begin with what's been seen and heard, what's new since last week. This section will include an update on the EIDL, PPP, unemployment insurance, and direct payments. And then, because we are aware that the money is moving, we will focus some discussion on the PPP loan for those that have received notice that they have been approved. We'll also include additional resources not previously discussed. In a section called the CARES Act, that's in the CARES Act too, our tax commissioner, Ryan Rauschenberger, will walk us through some taxation changes and other benefits under the CARES Act, and then a few words from our commissioner of banking, Lisa Cruz, about fraudsters who have taken some advantage of this situation, what to watch for, which will be followed by what everyone would like to turn at least some attention to: what comes next. What will the future hold as we look forward to what we are calling a safe restart for our economy? And finally, closing remarks from our partner, Eric Spencer at the Greater North Dakota Chamber of Commerce. Moving into this session, what's new? When we first scheduled this session last week, we didn't know if there would be anything to report. But as far as the week has gone, there is a fair amount of new information, including that we have reason to believe that as of today, the EIDL and the PPP funds are no longer available. That being the case, the discussion today will be most helpful to those that have an existing application out for the EIDL and have not received confirmation that they have not been approved, and also those that have already applied for and received notice that they have received the Paycheck Protection Program loan. We will also provide a status update for unemployment insurance expansion and a progress update on the direct stimulus payments. First, we'll talk about the EIDL, the Economic Injury Disaster Loan. Recalling that that is a low interest loan for up to $2 million, up to 30-year term with an emergency advance feature. If you applied, you're going to want to log in and check your status. Those that applied very early on, before the advance feature was announced, may need to go into the portal and select an advance amount. You'll receive a message like you need to complete your application or verification required. With the possibility that these funds have been exhausted, we don't know how an incomplete app will be treated at this point. If you have completed your application and your status is showing as complete and you have not gotten notice from the SBA as to whether you have been approved or not, you can probably expect that notification soon. You could also choose to email for a status update at disastercustomerservice@sba.gov. We also learned in the past week that the max advance amount does depend on the number of FTEs in your organization. It is not a guaranteed $10,000. Instead, it is $1,000 per FTE up to $10,000. And finally, we are aware of North Dakota businesses that have received advance disbursements, which makes this more real. And while it has not been confirmed directly from the SBA, as I mentioned earlier, we have heard reports that there are more applications for EIDL funds than funding available, and a number of sources have advised us that the funding is no longer available after today. Next to the Paycheck Protection Program updated guidance, which we will call PPP from this point forward because no one can say that really fast too many times in a row. Last week, lenders received their PPP loan documents. and also clarification that they were expected to disperse funds within 10 days of approval. That was new information since we have last discussed this topic. Also, as expected, since last week, the SBA has issued additional guidance for individuals with self-employment income. The guidance defines self-employed and answers 6 important questions, which we will discuss in a moment. First, the requirement that banks must disperse PPP loan funds within 10 days of SBA approval. Now recall that the purpose of the PPP is employee retention. The forgiveness feature of the PPP rewards employers who have maintained staff and salary following origination of the PPP by allowing forgiveness up to the maximum amount of the loan, so long as non-payroll costs do not represent more than 25% of the total expenses incurred during the covered period, which is the 8 weeks following loan origination. This news was troublesome to some businesses that had already released employees due to lack of work and who expected to remain largely inoperable due to either executive order or a steep drop in customer demand, making retention of employees difficult, and disappointing hopes that they could instigate the 8-week covered period after they bring their workforce back on payroll at some point in the future. The 10-day disbursement makes this strategy impossible. The SBA explains that this would defeat the intent of the PPP, which is to keep employees on payroll, receiving pay and benefits. In other words, to not lay employees off who then go to file for unemployment, even if they later return to payroll, hence the justification for the 10-day disbursement period. It is important to clarify, however, that you can still utilize the PPP if you release employees, but this will affect your forgiveness amount. But also remember that even if the loan is not forgiven in full, it may be forgiven in part. We await more guidance on that, and it does remain a loan with some favorable terms, including but not limited to its low interest rate and its minimum eligibility standards. On Tuesday of this week, April 14th, the guidance that we had expected was issued by the SBA, supplementing the first PPP interim final rule with further instruction for individuals with self-employment income. The interim guidance defines the self-employed for these purposes as an independent contractor or sole proprietor whose business was in operation as of February 15th of this year, is a U.S. resident, and who filed or will file a Form 1040 Schedule C for 2019. Because the self-employed, in this case meaning the sole proprietor or independent contractor, have not previously been eligible for SBA loans, a number of matters have had to be addressed for the very first time, ranging from, am I eligible? The answer is yes, to what documentation is required to prove my income, and more. The guidance answered these 6 questions directly. Am I eligible? How do I calculate the maximum loan and what documentation is required? How can PPP loans be used by individuals with income from self-employment? Are there any other restrictions? What amounts are eligible for forgiveness? And finally, what documentation is required for loan forgiveness? Because it would take probably more than an hour to review the content, and because this content applies to a subset of our total audience, we are going to refer you directly to the guidance if you fall into this category, but I will provide you a few highlights. Direction that partners in partnerships may not submit a separate PPP loan application for his or herself as a self-employed individual. The guidance also includes a calculation and example provided for the maximum loan amount for those with no employees and those with employees. It provides the permitted use for PPP loans to individuals with income from self-employment, including that owner compensation replacement is based on 2019 net profit. It provides that loan forgiveness for the self-employed who files a Schedule C is limited to 8 weeks worth of 2019 net profit to avoid a windfall that Congress did not intend. The guidance also states that additional guidance is expected for those individuals with self-employment income who were not in operation in 2019, but were on February 15th, 2020, and will file a Form 1040 Schedule C for 2020. We did add the link to the new guidance to this slide so that you can access that guidance in its totality. We trust that you will find it both specific and insightful, and that you have as much fun reading it as we did. Next, I will turn things over to my colleague, Brian Clipville, the Executive Director of Job Service North Dakota and Worker Safety Insurance, for updates on the expansion of unemployment insurance made possible by the CARES Act.
Thank you, Michelle.
You're welcome.
So it is hard to believe that 6 weeks ago the economy was booming. Unemployment rate in North Dakota, the adjusted, was 2.5%. Especially seeing what's happening in the state and the nation now. Just read that nationwide about 20 million unemployment insurance claims have been filed. In North Dakota, as of yesterday, we're at 52,444 unemployment insurance claims filed in North Dakota. And when you compare that to in 2019, when the economy was really booming, we were at about 20,500 for the whole year. So we're getting close to tripling that amount in a 4 or 5 week period. So that's phenomenal. Also, I'm going to talk a little bit about the programs that we have for unemployment insurance through the CARES Act. And go to the next slide, please. If you look at just some reminders for the PUA, that's Pandemic Unemployment Assistance, or the Pandemic Unemployment Compensation. That's easy for me. I used to say the acronym, but that doesn't sound very good either. But it's Pandemic Emergency Unemployment Compensation. You cannot quit a job to receive benefits because benefit amount is higher than wages. And I know we've had some questions on that already. And employers need to let us know either when they get the unemployment notice in the mail that their employees are going on unemployment, or else call us if you have work for them, but they would rather stay home and collect their unemployment benefits. It doesn't work that way. And then also, just as a reminder, there's also some very good FAQ questions, frequent asked questions on Jobs ND site. So you can get to there either through the North Dakota Response website or just go to jobsnd.com, and they have a lot of updated questions on that too. Other reminder that if you have questions on the county where the unemployment, what occupations the unemployment is happening, or the industry, we have that on our labor market information site, so you can go in there and find that information too. So next slide, please. So the first federal program through the CARES Act is the Federal Pandemic Unemployment Compensation, and that's that $600 addition to benefit payments through July 31st. We are working on that one for the technology programming to get that complete. We sent some payments out this week for those employees that are certified and are collecting regular unemployment checks, and so that went out, and we are working on, and hopefully in the process, get the check sent out from the weeks prior, because this program is going for a couple of weeks and we haven't had the program, but we are going to go back to whenever that person filed for the unemployment, and if they're due that $600, we'll give them the extra dollars. But we did have some problems with our computer programming, so we were hoping to get that out today, but hopefully we can get it out tomorrow, or if not Monday next week. So we had approximately $1 million paid out on April 15th. That's of that $600. So that's been a really good benefit, and it's for anybody. This FPUC is for anybody that is collecting an unemployment benefit check, either regular unemployment or PUO or PEUC. Next slide, please. So the other federal program that we have is the Pandemic Unemployment Assistance. And this one expands eligibility to independent contractors, self-employed gig workers. We have received some initial federal guidelines to this, but we are still waiting for more to come because this is can be rather complicated. We have been accepting applications at jobsnd.com. We have a site there for the PUA and the PEUC, and you can apply. And as of April 4th, when the PUA, we put the app on our website, as of April 4th, we've had 6,232. So that's updated as of today. So we put yesterday's total in there too. Next slide, please. The other program is the PEUC. That's a 13-week extension of benefits for those who exhaust regular state benefits. We just received some federal guidance on that a few days ago. There's more guidance to come. Again, we're accepting applications at jobsnd.com for that. We have an app for it. And as of April 4th, when this was implemented, through now, we've had 6,192 of those claims. So when you look at it with 52,444 regular unemployment claims, and then we've had in about 12,000 PUA and PEUC claims, and there's some duplications there, but anyway, that's well over 60,000 claims that we're waiting to process. Now for the PUA and the PEUC, we have the applications, and what is taking a little bit of time is we've got the applications, but we have to get those applications synced into our mainframe so that we can start getting the benefits out. So that's what's taking a little bit of time. We're working with North Dakota IT to get that accomplished, and hopefully we can get those applications synced soon, and so we can start getting the payments out. The PUA will probably be a little sooner, hopefully in the next week or two, and then the PUEC will be after that. But we realize it's a hardship in some people, but we're working as fast as we can, and as fast as we can get the guidance from the United States Department of Labor. Next slide, please. Well, I'll turn it over to Michelle, but I got a couple other things here that I was going to add on here. Excuse me. We have some frequently asked questions that have come through, and so I'll just read a couple of them here and then try to answer them real quickly so that we can get back to the direct payments. But first of all, one of the questions is, are employers receiving any kind of break with unemployment insurance, especially if they have to lay people off due to COVID and decreased business? And yes, the employer will not be directly charged for benefits due to the pandemic. During this time, benefit charges will be paid to the statewide pool of employers. Another frequently asked question, for those who have filed unemployment, when will they see the $600? Did that start right away? And I think I answered that already. That started on April 15th. Another question, how will unemployment benefits be monitored? Has there been instances discussed where people are filing for unemployment as they have more income than they were employed? And so I did talk about it a little earlier. It is critical that employers respond to the notice of claims they receive and an individual quits or refuses to return to work when work is available. Employers can also write or call separate from the notice of claim if they run into issues with employees wanting to remain on unemployment insurance when work is available. These are disqualifying situations. So if you have work, you need to let us know that, and then we won't pay the unemployment. One other question we had is if you apply for unemployment through the UI ICE, the regular unemployment insurance, the UI ICE, and were previously denied at the end of March for being self-employed, and you have since applied to the PUA program on April 6th and have heard nothing back from PUA. Do we have appealed the original UIS denial? No. What we do, you will, if you file for the PUA, we will get to those when we get that system synced with our main system. So as long as you file for the PUA, that's probably the better way of doing it. Get denied first through the UIS program, and then after that, then apply for the PUA or the PUC. So that concludes my stuff I have to say. I'll turn it over to Michelle next.
Thanks, Brian. All right, on to direct payments, or what some people are calling stimulus payments. As a reminder, this is a direct payment of $1,200 to individuals, $2,400 for couples, and $500 for children aged 17 and under, adjusted for income with some exceptions. You should see the IRS website for specific guidelines. On Saturday, April 11th, the IRS announced in a tweet that it had begun distributing the direct stimulus payments. According to the IRS, the first round of payments began this week for people who filed their 2018 and 2019 tax return with direct deposit information. This includes about 60 million payments. After that, payments are expected to begin for Social Security recipients who receive their benefits via direct deposit, which is about 99% of Social Security beneficiaries. We have confirmation that North Dakotans have begun to receive these payments. The third round will begin the first week in May, when the IRS will begin to mail paper checks in reverse adjusted gross income order, starting with the lowest income first. This is expected to be about 5 million checks. However, people who haven't filed taxes in 2018 or 2019 and are also not on Social Security may have to do some work. Last week, the IRS set up a non-filers application to ensure information from that segment of the population is collected and used to distribute the stimulus checks. Last week, we reported that the IRS had discussed launching an online portal to allow people to update their banking information. And it was announced yesterday that indeed the IRS has launched a portal called Get My Payment. This new tool will help address key common questions, including showing the projected date when a deposit is scheduled and allowing people to provide their bank information for a direct deposit instead of waiting for a paper check to expedite receipt. Notably, the Get My Payment portal cannot update bank account information after a stimulus payment has been scheduled for delivery, and it also does not allow people to change bank account information that is already on file with the IRS. Moving on, I got the PPP loan, now what? Well, first of all, congratulations, you got the PPP loan. Next, we're going to discuss what I can spend the funds on, the importance of documentation, and a little bit about PPP forgiveness. Once you receive the funds, what you spend on payroll, mortgage interest, rent, and utilities during the next 8 weeks may be eligible for forgiveness. This does not include paying off other business debts. Important to note, we have heard from some business persons that they are being told that they have 8 weeks from the notice of approval to the bank. This is not the case. You have 8 weeks from loan disbursement, which is within 10 days of the bank's notice of approval. Since every day matters, we suggest that you work closely with your banker so that that is well understood. Guidance tells us that 75% of the amount to be forgiven must be on payroll. Put differently, no more than 25% may be spent on non-payroll costs if you are going to maximize loan forgiveness. According to the Act, payroll includes salary, wages, commissions, or tips capped at $100,000 annualized per employee, employee benefits like costs for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payments for group healthcare benefits, including insurance premiums, and payment of retirement benefits. It also includes state and local taxes assessed on compensation. Be strategic. If, due to the timing of the commencement of the 8 weeks, you would only have 2 normal payrolls, consider scheduling an additional payroll. We are not suggesting that you prepay, but you can schedule an additional payroll to pay your employees what they are owed for hours worked inside this 8-week time frame. Remember, your actions during these 8 weeks will be used to determine if and how much of your PPP loan is forgiven. Next, to documentation. We have stressed this before, but we will say it again. Keep very detailed records because you will need to provide documentation for all eligible expenses when you apply for forgiveness. Be sure to keep records to confirm the amount of money that you have spent on allowable costs, like I've just discussed, the number of qualified employees that you have on your payroll, and their pay rates. Make sure that you have this documentation available to your banker because proof of payments made during that 8-week period will be needed, and you will be expected to certify to these expenses. We recommend working closely with your lender. Your lender will also advise you as to the documentation needed for loan forgiveness during these 8 weeks. Next, the topic that everybody wants to know more about, and we do too. The SBA and the Treasury are still working on more specific guidelines for loan forgiveness, but here is what we know today. We know that the language in the CARES Act itself references a return to full staff, meaning the same number of FTEs, with payroll not being less than 25% of what it was pre-pandemic. June 30 is a key date as a condition for forgiveness. And we now know that the bank must disperse PPP funds within 10 days of approval, and the covered period is the 8 weeks that follow receipt of the funding. What remains unclear is how those two requirements interact when it comes to forgiveness. It is anticipated that if a business cannot bring back all employees during the covered period, that the forgiveness amount will be somehow prorated based on the number of employees retained. The borrower's information sheet on the Treasury website currently states that your forgiveness will be reduced if you decrease your full-time employee headcount. Your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000 annualized in 2019. And also that you have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th of 2020 and April 26th of 2020. This said, we understand that more guidance is to be delivered, and we also look forward to this additional information. I also want to address another question that was submitted on the topic of forgiveness that we do know the answer to. If you receive an EIDL loan advance and you apply for and receive the PPP, the amount of your EIDL loan advance will reduce the PPP amount that can be forgiven. Now, allow me to turn it over to North Dakota's Tax Commissioner, Ryan Rauschenberger, to lead us through updates pertaining to state and federal tax deadlines and other benefits made available through the CARES Act.
Thank you, Michelle.
You're welcome, Ryan.
Today I'll cover a number of tax-related items in the CARES Act that we have yet to talk about on this weekly presentation. But first, I would like to cover some state and federal filing extension updates that were just made. Last week, the IRS pushed back a number of business income tax filings to July 15th, and we mirrored the IRS and also pushed back those dates. So businesses with fiscal year ends of January 31st and February 2nd were extended to July 15th. Fiscal year corporations and fiduciaries with Q1 estimated payments due May 15th and June 15th were extended to July 15th. And calendar year taxpayers for Q2 estimated payments due June 15th were also extended to July 15th. And businesses with May 15th and June 15th filing dates were extended to July 15th. So basically any business quarterly estimated or annual filings that fall between April 1 and July 15th were pushed all the way back to July 15th. The IRS did that, and we followed them as well at the state. Now on to the CARES Act. The Employee Retention Tax Credit is a new short-term credit introduced through the CARES Act. Businesses that closed or suspended operations due to coronavirus or suffered significant loss of revenue can take a one-year credit against the qualified wages it continues to pay its employees between March 13th, 2020 and December 31st, 2020. So which employers are eligible? Employers can qualify for the credit in two ways. First, if business operation is fully or partially suspended during any calendar year or any calendar quarter during 2020 due to orders from the government resulting from COVID-19. So that's one way. The second way is if the business remained open, but gross receipts during any 2020 quarter fall below 50% of the level for the same quarter in 2019. In such cases, businesses will then be entitled to credit for each qualified quarter until the business has a quarter where it's recovered sufficiently that its receipts exceed 80% of what they were for the same quarter in the previous year. And one thing to note is that that quarter where you exceed 80%, that quarter qualifies as a qualifying quarter. It's the subsequent quarter that would not qualify. So 50% below the previous year's quarter is a triggering on of this ability. And once you're above 80% of the previous year's quarter, the subsequent quarter would be ineligible. I do need to note that if an employer receives forgiveness on the payroll protection loan as part of the CARES Act, they are not eligible to take the employee retention tax credit. So how is the credit calculated? Employers can claim a credit worth 50% of qualified wages paid to each employee for that quarter, the qualifying quarter, through December 31st, 2020. Qualifying wage calculations break into brackets due to company size. So if an employer has 100 or fewer employees on average in 2019, the credit is based on wages paid to all employees, whether they actually worked or not. In other words, even if the employees worked full time and got paid for the full time they work, the employer still gets the credit. It's a little different for those over 100. So if an employer had more than 100 employees on average in 2019, the credit is only allowed for wages paid to employees who did not work during the calendar quarter. So it'd be those who were paid but were not actually physically providing services to the company, but that company kept on the payroll. So a lot more restrictive for companies with more than 100 employees in 2019. Now, for any size company, the qualified wages include group health costs. In all cases, the amount of qualified wages for each employee for all quarters may not exceed $10,000. And keep in mind, this is a 50% credit, so that's $5,000 per employee. Now, how to claim. Employers must report the employee retention tax credit via their quarterly payroll tax returns to the federal government. And these credits are refundable by the IRS, and that's really key, that you don't have to have as much liability to offset. They are refundable, so if you don't have enough payroll tax to offset, the IRS will actually send that back to you as a check. But this is there's a lot of different parameters to this program that I did not cover. I'd recommend anybody go out to irs.gov. They have great FAQs set up on their website to go into more depth. So I recommend anybody interested in this to go out there and check it out. So the delay of payment for employer payroll tax and self-employment tax, the CARES Act splits and postpones the employer's share of Social Security Social Security tax on payroll, effective from the date of enactment, which was March 27th, 2020, through December 31st, 2020. And 50% of that deferment will be due December 31st in 2021, and the remaining half would have to be paid December 31st, 2022. Again, this is basically just a deferral of payment. Also applies to the 50% of self-employment tax, where half of that deferral would be due December 31st, 2021, and the remaining would be due December 31st, 2022. Please note, though, that employers that receive a Paycheck Protection Program loan become ineligible to continue deferring these tax payments after receiving notice that the loan is forgiven. Just last week, the IRS updated guidance because there was a lot of confusion. They thought it was all or nothing, that if you received a loan, you were ineligible for this, but they clarified in their guidance that you are eligible to defer these payroll tax payments, but only until the point in which the loan is forgiven by the lender. So that's a very, very important clarification that the IRS just issued just days ago. So the additional, the very last part that I'd like to cover, the CARES Act. The CARES Act permits employers to pay up to $5,250 on employees' student loan debt. That is if an employer pays all or part of an employee's student loan debt, either as a routine practice or as temporary relief through the coronavirus. The employee does not need to recognize the debt payoff as income, and the employer can exclude the payment amount from payroll taxes. Typically, under most circumstances, that would be income to the employee. So that's a nice benefit for the employee. The CARES Act permits employers to pay up to $5,250 of employees' student loan debt on a tax-free basis. Please note, this is a combined limit of $5,250 for tuition paid on employees' behalf, plus student debt paid on the employee's behalf. So this is only, and again, this is only available through the end of 2020. And with that, I would like to turn it back to Michelle Comer.
Thanks so much, Ryan.
You're welcome.
All right, the next thing we're going to discuss that we have not previously made note of is subsidies for certain loan payments. Under the CARES Act, those that currently have an SBA 7A, 504, or Express loan may benefit from debt relief. Because these may be some of our most vulnerable borrowers, as they didn't qualify for traditional financing, it is the intent of the CARES Act to provide these borrowers additional relief. The Act indicates that the SBA will pay the principal, interest, and associated fees owed on existing covered loans for a 6-month period starting on the next payment due date. Covered loans existing at the time of the enactment of the CARES Act and those made prior to the 6-month anniversary of enactment are expected to be eligible for the full 6-month subsidy by the SBA. We await further guidance for specifics, but if you have one of these loans, please keep watch. We will too. Next, let me turn it over to my colleague, Lisa Cruz, the Commissioner of the Department of Financial Institutions.
Thank you, Michelle.
You're welcome, Lisa.
So we are seeing quite a few bad actors out there trying to take advantage of the situation. So we have to be more vigilant than ever. So there are a few things I would like to make you aware of to protect yourself. If you will go to the next slide, thank you. So be aware of fake or unregulated lenders. Our department has oversight of more than banks and credit unions. Other financial institutions are also regulated by us. So there are a lot of non-banks out there offering loans. And a non-bank is a business that does not take deposits, but they offer other financial services. And many of these lenders are out-of-state entities, and many of them are online only. And if you want to utilize one of those entities rather than your local bank or credit union, you need to make sure that first, if it is an SBA-related loan, the lender should be an approved SBA lender. So last Thursday, the SBA allowed non-banks to also offer PPP loans. So in case more money is put into that program, you want to be aware of that. There have been businesses that have signed up through solicitations, and then they later find out that the lender was not yet approved by SBA. Second, you need to make sure that the lender is authorized to operate in North Dakota. All non-bank lenders, including commercial lenders, must have a money broker's license issued by our department to be able to operate in our state. And we've had several non-banks apply for a license just the last few weeks, and we are expediting those applications. And if you are utilizing one of those, make sure you look it up to make sure they're authorized, and that can be done on our website. And it's nd.gov/DFI. And back to scams, that has been covered before, but it's, again, very important to be aware of those. Some scams we're seeing were also happening pre-COVID-19, but we're seeing an increase in business email compromise, and that's where an attacker hacks into a corporate email account and impersonates the real owner to defraud the company. An example where your business gets hurt is that your bank or credit union may receive a wire request from this hacked account, and it is therefore very important that you communicate well with your institution. So often, a bank or credit union will ask you a lot of seemingly personal questions when you open an account, and the reason for that is so they can understand your normal business activity, so they can hopefully catch anything unusual going on. But that's why it's important that you keep the communication license open, especially at this time. Similarly, if you do receive an email that seems odd from your bank or credit union, make sure you pick up the phone, because hackers can impersonate your financial institution as well. Ransomware has also been rampant, where cyber criminals are taking advantage of remote workers. So it is important that you educate all your employees on not clicking suspicious links or open attachments from unknown sources. The most common COVID-19 related scams that have been reported are offers of fake tests or cures, illegitimate health organizations where cyber criminals pose as CDC officials, for example. They will try to get you to click on a link, visit a website, or open an attachment that is infected with malware. Or they might attempt to have you share sensitive information. Malicious websites are prevalent. These fake websites and applications will actually install malware, and they'll steal your personal information or cause other harm. Fraudulent charities. There have been an uptick in websites seeking donations for fake or non-existent charitable organizations as well. And the Attorney General has posted information on common scams on his website as well. With that, I'll turn it back to you, Michelle.
Thank you so much, Lisa. Well, what comes next? First, I want to call your attention to a survey that is open now. We have attendees from communities across North Dakota attending this call today, and I want to make you aware of a community survey that is designed and sponsored by the Main Street team at the Department of Commerce. The Main Street team has worked with other state agencies and has created this survey to more deeply and specifically understand your community's challenges. You can find this survey on the MSI page at the Department of Commerce website or within the related press release on the Department of Commerce website. Please consider taking 5 minutes to complete this survey on behalf of your community. The results will be used to create solutions to address your unique community needs and in future policy discussions. Also, as Governor Burgum discussed in yesterday's press briefing, the Department of Commerce looks forward to the next stage of our new normal, working with you, with businesses and employers to identify new protocols to restart without a rebound, so that we can safely guard the lives of North Dakotans while finding a North Dakota smart path to restoring livelihoods. Governor Burgum yesterday extended the executive orders that limit certain business operations through April 30th, and also committed that the Department of Commerce, who has been leading the economic resiliency team since its inception in mid-March, will be leading efforts for our North Dakota smart, safe reopening. Over the next several days, Commerce will be working directly with associations that represent the businesses affected by closures connected to executive orders. Again, this is about restoring lives and livelihoods. It's not people versus the economy, it's people and the economy. It's about human well-being and easing isolation and improving mental health. By April 30th, we hope to have restart standards as recommended by the business associations working with the Department of Commerce and approved by the North Dakota Department of Health. And of course, our path forward will depend on the progress that we've made controlling this virus and making sure that we have sufficient hospital capacity, that we have sufficient PPE, and that we have made provisions to protect our most vulnerable populations. In closing, a few reminders. As Lisa said, please use trusted resources for information. The number of opportunists and the amount of misinformation is astonishing and disappointing. You can use our highly curated site at ndresponse.gov or of course consult the SBA and Treasury websites. Document everything. We've emphasized this already, but it's worth repeating. It is critical that businesses document all COVID-related expenses, losses, and any other information relating to the COVID pandemic. Our closing reminder, while much clarity has emerged over the past week, a limited number of questions remain unanswered. Therefore, it's possible that some guidance delivered in this presentation may change. You should consult your attorney, accounting, tax, financial advisor, and banker before making any decisions regarding your business. We want to thank you for joining us today. Whether it's your first time with us or you've joined us each week, it's been a privilege to serve you. For the Department of Commerce, you are the reason that we get out of bed in the morning, and we want to thank you for your courage and perseverance during this trying time. While this will be our last regularly scheduled business briefing, we will continue to be a resource, and we will schedule future briefings as updates necessitate. We will keep open our email box, businesshelp.covid19@nd.gov, for your questions pertaining to resources and clarifications. Before you go, let me turn it over to my colleague, Eric Spencer, President and CEO of the Greater North Dakota Chamber of Commerce.
Thanks, Michelle.
You're welcome.
And on behalf of the business community, I'd like to just thank the governor, you, Commissioner Comer, as well as all the elected and appointed officials who have spoken with us over the last 5 weeks. We are very fortunate here in North Dakota to have such a high level of communication and transparency from the administration. So again, thank you. As Michelle said, this is our last regularly scheduled session. I'd encourage you to go to ndresponse.gov to click or to hear a recording of this, as well as the supporting materials, or you can see that at ndchamber.com or many local chambers. Again, that's a recording of this or past sessions. There was some questions that some of you submitted about the new family leave and sick leave provisions of the Family First Coronavirus Response Act. The Greater North Dakota Chamber has done a free webinar last week, and the recording of that is available on our website at ndchamber.com. And we have part 2 of that webinar scheduled next week on Tuesday, which you can attend at no cost, and it's open to members and non-members as well. So with that, we encourage you again to go to ndresponse.gov for the latest information, and thanks to everyone for participating in this over the last 5 weeks. Thank you.
Thank you all for joining. The live presentation is done.